Roderick Munsters. He's the CEO of the company. Thank you so much for coming in. It does seem like it's a very difficult market to navigate, just because a lot of the havens are overcrowded. If you get scared, that's where you put your money. So your strategy would be putting a bit more risk on, or still very prudent, a lot of cash, and going for these safer assets?
Well, it depends on your investment risk appetite and on the investment horizon that you have. If you will not want to lose money, of course, cash is safe. If you have a bit of a longer term horizon, and I'm a bit more used to that, I would say that putting on a bit more risk, but very cautiously, might not be such a bad idea. If you
a bit more risk where?
Well, high dividend stocks, for instance, might be interesting, whether it's oil or solid retailers. If you look at the dividend yield, it's almost twice the yield that you make on 10-year German bonds. So that pays off handsomely. And of course, you may lose some on your capital, but longer term, there's an expectation of these companies adding growth. And, well, as we all know, nominal bonds will only give you nominal returns.
But how do you see the world right now? Because a lot of investors seem to say, you know, there's a plan A, if everything feels okay, and actually in the next couple of weeks the G20 and the European leaders go into action and actually give us a solution, or some kind of a solution or leadership. And the others say, well, if this is not handled, then it's going to be mayhem on the markets. Do you have a plan A or plan B, or do you think that overall we're going to muddle through and get away with it?
Yeah, that's our base case scenario, muddling through. It has been for 2 to 3 months now. Politicians seem to be behind the curve all the time. They may get in front of it, but that's not sure. So you should diversify your bets and make sure that you have assets that return well in both scenarios.
So how much cash are you keeping right now?
Well, if you ask me this personally, in my long-term pension plan is 10%.
Okay, long term, so what, 5-10 years down the line, or even longer?
Yeah, it's even longer, and cash is waiting to be redeployed, and not so much as a structural asset class in my perspective, because it's earning so lower return.
Now, talk to me a little bit about, you were just saying that actually some of the companies that you like, energy and oil, because of the dividends. Is the UK looking that little bit more attractive at the moment? Because actually UK companies have always given back to shareholders, possibly more than the rest of periphery Europe.
Now, what we see is that there's a risk-on, risk-off trade, and if a country is being in the news negatively, everything's being sold. We see that in bonds, we see that in banks, we see that in government. And so the UK is a bit outside of Europe, has been for a long time, and that's why it's not getting hurt so much. I think structurally it's not really in a much better position than a lot of Europe countries. So I would specifically look at strong companies and not so much at countries.
I wonder what you make of today's trading session. We're gaining on speculation that we may get a bit of help on the banking sector in terms of recapitalization by some European countries. It seems that it's coming out of nowhere. I mean, it seems that the markets are so nervous that they actually cling on to anything they see, and it's a very volatile market that is here to stay.
Yeah, on my Bloomberg screen I saw this morning the openings were a lot higher than where we're trading now. Volatility is high, 2% on a day is almost nothing. I expect that to remain, and I wouldn't see this as a turning point in the market.
What's your biggest concern? We talk about recession, we talk about sluggish growth. What about the banks? Are we at risk of actually repeating a Lehman Brothers moment?
Yeah, I've been there myself. I'm afraid that politicians still do not get it, that they need to move. And the losses that markets have incurred, and thus the public at large, are a lot higher than the packages that we're discussing for Greece or for Italy possibly. So I'm aware of the fact that politicians have a democracy, that there's voters, that they have to have consensus, but please speed up.
But will Dexia be the wake-up call? We're seeing for the first time some of the banks, you know, the peripheral countries we've known banks are in trouble, they need help, liquidity and recapitalization. This is the first bank which is really touching core Europe.
Yeah. So what you see is that if things really turn bad, the politicians step up to the plate. That's also my perspective vis-à-vis the Euro zone as a whole. At the end of the day, I think politicians will move, but they will move only at the very last moment.
So are you looking at currencies at all? Are we actually risking, if we do recapitalize all of the European banks, do we risk some of the core Europeans losing their AAA credit rating?
I doubt that, because I think that the earnings capacity of countries in the periphery of Europe are a lot lower than the stronger ones, and I do think that politicians are very strong-willed of keeping the euro as it is. And we should not forget, I think, that the euro is currently trading at 133. That's where it started the year. So all in all, you could say we've seen large volatility. but not so much has changed there.
And it's not bad actually for some of the German exports.
No, they'll be happy with that.
They would be happy with that. Would you be investing in Germany because of that?
Well, for sure, because that's one of Germany's key strong points. The exports industry, manufacturing base. I'm a big fan of German companies.
German companies more than U.S. companies? Talk me through regionally. I mean, we went through some of the industry groups that you like.
Yeah.
Emerging markets versus, I guess, the stronger European countries versus U.S. What's your favorite pick?
Yeah, from a long-term perspective, it should definitely remain emerging markets. That is where growth will come from. They're on a winning streak, and I would stick to a large weighting there.
But what kind of, because I'm actually surprised about that. We think that, emerging markets are growing, but the stock markets aren't performing as well as what's happening in the U.S.
Yeah.
They haven't decoupled yet, so why are investors nervous? I mean, if you think that it's going to grow, but actually you're going to take more losses in terms of the stock markets, why play the emerging markets?
Well, from a long-term perspective, they will also have a middle class that will start to invest. They'll have a homegrown basis of investors. There'll be a lot of capital, both available and asked for. And I'm a strong believer in their long-term story.
Roderick Munsters, thank you so much for joining us. That was the CEO of Robeco Groep. Thanks for coming on the program.